Gentleman from New Mexico.
Thank you, Mr. Chairman. Again, we've got 5 minutes. I don't want to cut you short, but I'm going to ask about 5 questions, and so about the 30-second point. First of all, just in response to how many jobs we can cut or how much spending we can cut without hurting the economy, New Zealand tried this back some years ago, and they cut 63,000 jobs out of one department from 63,000 down to 1, and their economy jumped from the bottom third of the world's economies to the top third. So on the questions, first of all, I think, Mr. Taylor, the Federal Reserve started in 2008, October of 2008, paying interest on reserves, IORs. To me, that looks like that's one of the regulations that is somewhat impeding growth because it's causing banks, it's giving banks reasons that they would not want to lend money. Instead, they would hold it in the safe harbor of reserves. Is that a correct viewpoint? Is that the one that's incorrect? Should we reconsider that policy?
The rate is quite low at this point. I would be more concerned that when rates get higher, what's going to happen with that at this point. But now it doesn't seem to me that would be something to focus on as a problem.
We're losing the entire multiplier effect when we hold those bank reserves drawing interest.
So just very briefly, when the Federal Reserve does begin to have to raise rates, I think it's important for them to go back to the strategy they used to have, which does not necessarily entail paying interest on reserves.
Mr. Poole, you had talked about Medicare as being a problem. Has anyone, to your knowledge, ever done a study? I mean, I've talked to doctors who tell me for their time they get maybe 15, 20 bucks for seeing a patient. Has there anyone that ever taken a look per transaction in the medical doctor's office how much the bureaucracy in Washington actually charges and receives? If we're paying the doctors 15 bucks, I would guess we're paying close to 100 bucks per visit. Is there anyone who's actually quantified that?
I'm not an expert on health care, and I don't know.
No, you mean you mentioned it. I'm not asking you to be an expert. Is there someone who's quantified anything like that? You go into great details, the reason I'm asking you. You go into great detail about Medicare.
I don't know the answer to that.
You don't know the answer to that. If you find that, I would appreciate knowing. I suspect we pay the bureaucrats far more per transaction than they pay the doctors, which to me is upside down. Mr. Cohn, with the printing of money that the Federal Reserve has done, is there a risk, in your opinion, of inflation or hyperinflation in the near future?
No, not of inflation or hyperinflation in the near future.
Are they experiencing
there is an inflation risk over the longer run?
No, I mean, you said no. I'm willing to take no. They're seeing extraordinary inflation in China and other countries on food right now. The price of gold has skyrocketed in the last year. The price of silver has almost doubled in the last year. Are those not signs that the dollar is losing confidence?
I don't think so. I think
okay,
the price
you don't.
of goods
That's
and
fine. You don't think so. I'm really pressed to get time. You don't think so. That's fine. Mr. Scott, you have mentioned on page 14 that you believe the Federal Reserve has the expertise for making such decisions as blah, 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 whatever is in your report. And yet, when I look at the Federal Reserve, I asked Mr. Greenspan in this room before he left, and asked Mr. Bernanke, don't you think the hedge funds are causing us great uncertainty, maybe the instability of our entire economy? Both dismissed that. So we had long-term capital as a pre-warner, and then we had the collapse of the rating institutions and the insuring institutions before the major collapse. Why do you think, with all the expertise that you put in the Federal Reserve, why do you think that they decided not to do anything? You declare that you believe in them. You declare that they do it. Why do you believe they ignored the warning signs, I guess? Long-term capital collapse. Are you familiar with that collapse? Yes. And the collapse of the rating institutions, the insuring, we had 4 insuring institutions that collapsed about a year before we took those TARP votes, which I opposed. So any ideas? You place a great amount of faith in the Federal Reserve. Any ideas why they maybe, with all the expertise you attribute to them, they didn't get the thing right? Can't answer that. Would you speculate that Dodd-Frank is really dealing? There are many things that deal with derivatives and hedge funds in Dodd-Frank. If we created a stable currency by stopping the printing of money, don't you think that many of the things that we need to regulate, and your presentation deals greatly with the regulatory process, don't you think those regulatory requirements disappear to an extent if we create a stable currency, one with value that is stable over a long period? No? So hedge funds, you would be required to need a hedge fund if you had a stable currency. I think maybe a little bit differently. Mr. Chairman, thanks for the time.
Thank you.